Hey friends, welcome to Billionaire. This is Raghav here. Today I want to bring you another educational video where purely you can trade with patterns and trend lines. Of course, I'm using the 20 simple moving average and 5 exponential moving average, 5-period exponential moving average. Now be patient. Now, all this works purely based on the 4-5 different types of candlestick patterns, which you know as engulfing candle, inside bar, morning star, evening star. When you combine them, it becomes a reversal pin bars and doji. Only these 4 types of things. Now, just pay close attention. Now, this you can either use it for scalping or you can use it for 1:2. What do you call? Profits. But if you want to go for 1:2, the probability will be high only if you are catching this either at the bottom or at the top, right? Now, especially in Nifty and Bank Nifty. But however, I will show you the tricks and I will leave the profit part for you guys to decide. But how we are going to spot the trade, this is a very high probability setup, which most of you know. Now, the assumption here is whenever price is about 20 simple exponential moving average above, it is high, you have to think only to buy. When it is down, you need to think only to sell. Now, this is not as simple as it is, right? Most of you already know it, but how we are going to trade, I will show you in a while. Now, this is last Friday. We'll just review few of the charts so that you can get a grasp of it. Within last 2-3 days, I will show you so many patterns where you could capture the trades with a very high confidence and with very high probability. Now let's assume, okay, the blue line is the 20 simple day moving average. Now here it is. So yesterday market fell sharply down. This is a gap down. Market is here. On this day it is gap up. So what I need is I need a trend line. I'm making it big for you so that you can understand. I'm joining 2 dots. So if you have more than 2, it is even better because it shows that price is respecting. But to start, we need only 2 points to join. Now you know this trend line early in the morning, market gives this pattern. This is a very powerful pattern, all right? Market gives a red bar and the green bars are breaking the high of the first big red bar, which is very strong bar. So most of the time we'll be thinking market can go up. But what I want you to observe here is here I don't want you to jump to any conclusion because the distance between the 5-period exponential moving average and 20-period simple moving average is little distance and it is early in the morning, so we don't know yet. So suppose if you're waiting, so I would like to tell you that the high probability of this trade will be closer to the trend line or closer to the 20-day simple moving average. Now here market gives a very strong pattern. What pattern it is, can you tell me? So more than pattern, this is a strong green bar breaking the first 5 minutes high, and immediately you get a reversal doji and a very strong red bar breaking the low of this strong green bar. So you can understand that here sellers are dictating the terms and market can go down, but I am not going to take the trade because rule number 1, price should be closer to 20-day simple exponential moving average and it should be diverging away from 20-day simple moving average for buy, and it should be breaking 20-day simple moving average for sell, or the trend line support or break on the trend line. Remember these rules. So market comes down. Now here, watch this pattern near 20-day exponential moving average. I am seeing a wick to body engulfing candle. See, the wick is low, below this red bar. It broke the 20-day simple moving average. When we are waiting for the follow-up, because we have a trend line which is indicating market can go up, and the gap down, gap up has also indicated that market can go up. Near 20-day simple moving average, the blue line, you get wick to body engulfing candle. So suppose if you're taking a trade immediately after this long position, right? Just watch this. After this, you're taking a long position, keeping the low of this wick to body engulfing candle as your stop loss, and you can go for 1:2. So your target gets hit here. near the high of the candle your target is hitting. Am I right? Exactly. See here, 1:2. Now you book, you exit. This is option. You can stay put. Now after this reversal wick is broken, market can still go up, right? Now we are watching after you booked. Now somewhere, now you have another trend line. Usually I would like to draw from here. We are having this trend line. Okay, market seems to be breaking the high of the trend line as well. Yes, it broke the high of the trend line, but after immediately this strong green bar where it broke the trend line, again you have to see the price is not near to the 20 SMA period. The discipline matters here, guys. Remember, it's not that trading we were going to take trade wherever we feel like trading, because trading is there not for retailers to make money. Trading is a very boring game. You have to wait patiently for your setup to come, and if you follow the discipline, there is enormous amount of success involved with this, with a very high probability. Watch this. After a big green bar breaking, we are not seeing a follow up near the trend line breakout. Instead of that, we are getting this simple red bar. So sometimes we the secret of pivot boss calls it, when you see a very big bar, it is more than 50% body and a small red bar, and before forming this red bar the price tested the high. The wick is nothing but price still went here, this area, and then it dropped down, which means it is testing the area and coming down, forming a small red bar. We call it as extreme reversal, right? It's an extreme reversal, means it is, sorry, outside reversal, I beg your pardon. Outside means it went outside the high of this green bar to test whether there are any buyers who can take the price up, but instead of that it came down, and this is your first signal that market is showing the weakness. In simple terms, is not showing the follow-up, and then you get another doji, and then you get a very big green bar which is near to 20 SMA. Now near this 20 SMA, if you observe, the 5 EMA is still above. Why we are using 5 EMA? 5 EMA measures the momentum of that particular breakout. Remember, it's 5 EMA. There's nothing wrong in waiting. It gives the confirmed signal, and then you get an inside bar. Watch this. After the strong red bar breaking the 20 SMA, you have an inside bar breaking the 5 EMA. Now I would be interested in buying at this point of time, because with this price action, it is showing some buying strength here. Inside bars means it's a pause in the ongoing trend. Now I want the high to be taken out just to see whether it can go up. Now after this inside bar, I get a reversal pin bar and then a red bar. And what is this pattern? When you see this on a 15 minutes time frame, somewhere like if you divide 5 and 15, if you don't know how this pattern looks, I'm sorry, let me remove everything. I don't need any of this. All right, I just need simple 5 minutes candles. So this I'll make 5 minutes, and this is 15 minutes. Okay, sorry, this is 5 minutes and this is 15 minutes. So usually when you divide, if you don't know at the beginning stage of price action, see here, this is the 15 minutes. What you're seeing here is, this is a wick to body engulfing candle formed at the top. So that is the reason I want the high to be taken out. When you see on 5 minutes, this inside bar can fool you. It will tell you, yeah, we are in an uptrend near 20 SMA, similar to here. This is a wick to body engulfing. We can go ahead and buy. But when you see this on a higher time frame, this is wick to body engulfing. So which one has more weightage? The higher time frame always has a more weightage. Now this is telling you, just hold on, let's the high gets broken. Anyway, you have made 1:2 profit, right? Now you're waiting if there's any crossover. If you're going to catch a high probability trade at the top, you may get 1:2. Now then we get this reversal pin bar. Now you have some kind of strong probability and weakness market is showing, and near this trend bar, right, near this trend bar, the trend line is getting broken, and after getting broken, all you need to do is chase the 5 EMA. So you're going to take a trade, short position Once the 20 SMA and 5 EMA is broken here, and what will be your stop loss? Your stop loss will be this high. Yes, this is the safest stop loss. Now for this stop loss, can I get 1:2? Yes, you had 1:2. Now I'll switch back to my 5 minutes time frame. So you knew with the trend line, with the 20 SMA and the 5 EMA, we had a strong trend. Now, what is the indicator we are using? The indicator we are using is simple moving averages, if you ask, but still it is a charting or trading with trend line. Now here, one more chart and then you can understand. I'll show you the price action patterns and then you can think. Okay, this is a very strong bar below 5 EMA. Whenever this happens at the beginning of the day, what is my stop loss? Even if I jump into it, see, this is where the price has opened, it has gone up and started pushing down. My stop loss will be always above 5 EMA because it is a momentum indicator, and if you are chasing momentum, we need momentum and the discipline. If momentum fails, to exit at the minimal stop loss. This is an opening candle. I don't have any stop loss. If I'm entering in the first 5 minutes, my stop loss will be above 5 EMA. Anyway, it came down, so immediately you can enter. Let's assume you did not take a trade, but you know market is below 20 SMA and your trade is closer to 20 SMA. Do we have any price action near 20 SMA? This is not the ideal evening star, but when you see this, what is happening here? You have a doji and this red bar close is below the previous green bar. The close is very important. Now this is showing the momentum near 20 SMA. Suppose if you're taking a trade here, okay, you're taking a trade below this and shorting, keeping the stop loss above this red bar. You're getting 1:3.5. What are we looking for? 1:2 trades only. Do you understand? Near 20, following 5 EMA. It is up to you whether you want to go for more or not. Now let's wait and see whether we can get any other trade. Now this area after forming, you know, this area, always put a box so that you can understand market is in range. Now near 20, watch guys, near 20. We have a very strong Morubuzo candle, very strong. What is happening here? Slightly out, coming and closing a small body outside reversal, first weakness. Then you get an inside bar. See, this is an inside bar. It's a pause. Whenever this inside bar is broken, now that side market makes the decision, high probability. Now this inside bar is broken with a wick to body engulfing candle. Now what should we do? We just need a candle breaking 20 SMA and we'll be following 5 EMA. Now this candle broke and 5 EMA is below that. Another short trade. Where will you keep your stop loss? You'll keep stop loss above this if you want. This is a later part of the day, so I want a lesser stop loss. If momentum is there, it has to go down. Now what is my target? 1:2. Your target hit within 5, 10, 15, 20 minutes. Understood? Similarly, I mean, this is not a counter trade, but suppose if you want to understand the price action, watch this one. Inside bar, almost an inside bar. This red bar is an inside bar. Doji, market is making a decision here, and after making a decision, market trades outside and forms a small bar. Extreme reversal where price can reverse. I'm not asking you to take the trade, right? Extreme reversal. This is end. So if you want one more chart, I can show you some other price actions where how you can identify the trade near 20. Watch this one, guys. This is classic. Doji reversal pin bar, 5 market tries to go above 20 SMA. And what is this? By this time, you know it. Inside bar. Okay, I'm going to go short below this, or I'm going to go short below this green bar. Okay, below this. My stop loss is above the high. This is first 15 minutes. So my target, I want 1:2. It's already hit within 10 minutes. Very sharp, because at the opening, you have an inside bar and a candle closing below it. You can take it. So usually people want to take the trade here, but I prefer in the opening, the moment you get an inside bar below this green bar, if the trade market is going down, enter, because your stop loss will be that much smaller, that much smaller. Watch this one. So some of my guys on this day I was trading, they said it was a wrong entry. Obviously I was using pivots. This was previous day low area, extreme, what is called, it's a reversal pin bar price rejection, but the body is big. Now when I took a trade here, this is what is this? Engulfing. I had 50 points, 1:2 from here. From below this here, I had 1:2. I took 50 points. Now watch this one. Just showing you at the bottom, inside bar, pause, reversal pin bar at the bottom is again a negative. Negative in the sense that it's not, market is not strong enough to make the close below this inside bar. So market a high potential to go up, market goes up. But what have I told you? I want to take the trade only near 20 SMA. Now market comes here. Now this is a very big candle. After reversal pin bar, market is breaking, but 5 EMA is above. Watch this, guys. This is an inside bar, which means the ongoing downtrend is paused. Now I want to go up. Draw trend line here. Okay, so it's near trend line, it's taking support. After that, you get a doji, and this bar is breaking, and you have a 5 EMA. This is where I want to go short. We're here. Okay, below the low of this. My stop loss is above this red bar, My stop loss is here. And I want to go 1:2. Do I have 1:2 here? Nearly, almost 1:2. Watch here. 1:2. You had your trade. So this is exactly how market works, guys. Trend line, support you get. And watch this one. What is this pattern? It's a morning star. You have a price rejection at the bottom, doji, red bar, and a strong green bar closing above the high of this red bar as well as this red bar. Market is pulling upside. You have a trend. Now near this, how I would like to take. Okay, I know this is the price action first. Now is it taking the support near 20 SMA? And whenever market breaks, the high of this is where I would like to take, with the low of this particular candle as my stop loss, and I will see if I can go for 1:2. Yes, I have 1:2. Now if you don't get, don't worry, but in a day, if you trade keeping all the price action, simple common sense, all right? The simple common sense, what I mean is, when I see I see this, okay, I told you in the previous scalping videos, WMN. So when I see this, I see this price action and this kind of formation, and take the high probability trade with a very simplistic stop loss where I can get 1:2 profit, and it works. It really works. This is exactly how you should be trading naked charts with only simple moving average and a momentum indicator, which is nothing but 5 EMA. Now, when I say indicator, these are not exactly there. You have RSI, you have pivots, you have Fibonacci, you have a lot of stuff. But what I'm trying to show here is a simple, powerful trend line. Now, even here, I did not draw the trend line. But suppose if you want to draw the trend line, okay, just see here, before I took the trade, the long trade, where is it breaking, guys? So for my trained eyes, I treat trend lines without drawing. Where is it breaking? Where did I take the trade? High of this, on top of this Marubozu I took, keeping this as stop loss, because the trend line is broken with a very strong Marubozu candle. And then you can confidently go and capture it. Simple, very effective. And even in trend lines, you have very stiff trend lines, which can just give the break of this means nothing. It is just a pullback. See, this is a very stiff trend line. This break is nothing, it's just a pullback. But when you get at 45 degree, 50 degree, or not 30, but 45, 50, or these kind of slant trend lines carry a lot of weightage when they get broken with volume, which means which a big green bar. Now, hope you guys understood. I have used only inside bars, morning stars, evening stars. And for what you call engulfing, I'm using wick to body. It's not the body, wick to wick. If it is engulfing, I'm considering it as an engulfing candle. Reversal pin bars. Doji I did not see, but probably if I try to show that, it will become a very, very lengthy video, but I hope you guys understood what exactly I'm talking about. Right here also double top, reversal pin bar. This green bar is taken down with this red bar near 20 SMA. You have 5 EMA, definitely I know it is a 1:2 trade. Simple. Honestly, I haven't seen so many morning stars, evening stars, and double star pattern, which I am seeing in Nifty for last couple of months. So I felt it was time for me to show you how we can use these price action bars to take the trade. If you don't like it, please do comment, but if you like it, please do share, subscribe, and encourage us to bring more quality videos to you. Yes, I have kept the caption as how to trade naked charts. The only reason is we are not using any high funda indicators here. We are just using a simple moving average just to be on the right side of the trend. Otherwise, we are just using the price action bars. Literally, we are using zero indicators. Thank you all. Have a good day and happy trading next week.